There's been a ton of talk about the housing market these past few years. Housing prices have risen to all-time highs, and some sellers are seeing returns on their homes they bought just 5 years ago of over 60%. But with this extreme pressure on the market, is there any good reason to buy a home right now? Well, two heavyweights in the real estate world have come to very different conclusions on this question. And today we're going to be discussing two different approaches to real estate and which one might be right for you. Hi guys, I'm Jeremy with Ask Jeremy. Before we get started, don't forget to hit the like button and subscribe for future content. Okay, so the men I'm referring to are Graham Stephan and Kevin Pathrath, aka Meet Kevin. If you've never heard of these two, they're both financial and real estate experts, as well as professional YouTubers. These two seem to be friends and actually used to co-host the YouTube podcast Millennial Money together, along with YouTube financiers Andre Jick and Jeremy from Financial Education. No relation. Although Kevin recently stepped away from the podcast, there doesn't seem to be any hard feelings. And even if they were, we wouldn't go into them here. This is a real estate channel, not a YouTube drama channel. So this past week, Meet Kevin came out and told his followers not to buy real estate right now. Kevin believes that we're at the top of the market and that we could see substantial downturn, maybe even a crash at the end of this year or beginning of next year. Meanwhile, Graham Stephan opposed him on a recent episode of Millennial Money. I'll link the clips in the description below. But Graham's counter-argument is essentially that there are always deals that you can find in the market, a point which Kevin himself has often made. He also stated that there's almost always options for people in order to prevent the risk of going underwater in their mortgage, such as renting out extra rooms in your house, a technique that's known as house hacking, and also suggests finding houses that are fixer-uppers without major defects. Now, some of those may not be options for everybody, but then again, real estate investment as a whole is not right for everybody. Graham released a video yesterday which helped clarify his point and mentioned several bad reasons for someone to start buying houses this year. Among them were to make a quick profit, meaning buying with a plan to sell in the next few years, as well as rushing to buy before interest rates increase, since the Federal Reserve still plans to increase interest rates by at least 100 more basis points over the next few months. People who tend to rush into housing purchases often fail to consider the total cost of owning a home, including property tax, transaction fees, insurance, and even the opportunity cost of spending money on a down payment that could be used on other investments. After all, when you consider how low the stock market and crypto have plunged, it might be a great time to buy into those markets in order to see great returns when they bounce back. Worse yet, if a buyer hasn't been properly informed about the loan type they're taking on because they're too focused on making sure they get qualified, they may risk signing up for a bad loan type. Unfortunately, bad loan types such as adjustable rate mortgages have been making a bit of a comeback recently. If you're not familiar with adjustable rate mortgages, they're home loans that do not have a guaranteed rate and adjust as the market changes, meaning that as the Fed continues to raise interest rates, people with these types of mortgages could see their mortgage payments continue to grow higher and higher, risking them becoming unaffordable and putting the borrower in a terrible situation. These type of loans were very popular in the early 2000s and played a pivotal role in the 2008 housing crash. It's issues like this that make it essential to have a knowledgeable and trustworthy real estate agent that you can rely on to help you make decisions that are in your best interest. That is one of the reasons I made this channel, to give people as much information as possible in order for them to have success in the market. Now, as far as what I think, I actually agree with Meet Kevin that there is a substantial chance that we're about to see a significant change in the housing market. In fact, some areas have already seen a drop in average housing prices. As prices lower, there's still a chance that buyers who weren't interested or able to get a house at the top of the market will jump back in now, which will cause the pricing drop to slow or stop completely. This is especially true of any cash buyers that have been waiting on the sidelines, as they're not affected by interest rate change and could actually benefit from Fed raising rates. Meet Kevin isn't alone in his thoughts about the market, with a ton of experts agreeing that a crash is coming soon. But remember, the experts are not always right. No one can predict the future, and it was only 2 years ago, back in March of 2020, that all the experts knew there was a real estate crash coming because of COVID. Instead, we saw housing prices rise even faster than they did in 2019. So while I think Kevin's probably correct, I know that nothing is guaranteed. I also see validity in Graham's argument. And in fact, I'm currently looking for another property to purchase as a rental myself. And while I have certainly seen plenty of houses that are overpriced, I'm confident that I'll be able to find the right deal, and I won't stop searching until I do. Being in real estate, I know the price point I'm willing to pay and the amount that I can extract from a property and rent. As long as the returns are greater than the cost, I'm going to be willing to buy. The reason I have this mindset, as I've discussed in the past, is because it was not long ago that I had a net worth of negative $20,000. But after getting out of debt, real estate became the key to my financial growth. And it's the primary reason that I have a positive six-figure net worth right now. So why am I not concerned about getting in at the top of the market? Why not at least wait and see? Well, just as Graham said in his last video, buying a home this year is fine as long as you understand the costs associated with owning a house and don't plan to sell it in the next 5 to 7 years. And personally, I have no intention of selling any of my properties for the next 30 years. Let's put it this way. If you had a chance to go back in time and buy Bitcoin when it was at 19,000 back in 2017, would you do it? Keep in mind that if you bought in December of 2017, that would mean that you would have bought at what was an all-time high back then. From there, Bitcoin slowly dropped down to what was nearly $3,000 a year later as people sold off. But if you had held on to Bitcoin, you would have seen it balloon up to a high of 69,000 per coin last year. And since then, Bitcoin has never returned to the previous high of 19,000, basically guaranteeing you made a significant profit. And while the rise of crypto has obviously been impressive, the housing market has way longer track record of gaining value for its investors. I'm not afraid of buying in the wrong time because I know that time in the market beats timing the market. And again, finding the right investment property and renting it out is a great way to create passive income. I'm planning on making future videos about how to find a good real estate deal and how to rent out in a way that can instantly make you more money than it costs. So if that's something that you're interested in, hit the subscribe button so you can see when it's made. Quick reminder that none of this is financial advice and you should always do your own research. But if you do have any questions, comment below. And if you live in South Carolina and would like help from an expert real estate investor and agent, you can reach out to me by going to AskJeremySC.com. That's SC as in South Carolina. Thanks, guys. Have a great week.